Hello, fellow traders. 'Tis I, the rumpled one. It's Tuesday, February the 12th. The year's 2019. Let's talk trading. How to trade like a pro. Losing like a pro. So, yesterday we talked about shedding our rookie skin. Well, part of shedding the skin is you have to learn to lose like a pro. This is trading. You're not going to win every trade. It's just, that's just not the way it works. You might have a streak. You might win 10 in a row, 20 in a row, 100 in a row, but sooner or later, you're going to lose. But the question is, do you lose like a rookie, an amateur, or do you lose like a professional, a pro? I mean, if you been reading the YouTube comments out there, I think maybe over the past couple of months, there's one trader who got stuck in a trade and was down something like 500 pips. Now, I'm not picking on that trader, but do you think a pro would lose 500 pips? I mean, just ask yourself that question. Would a professional trader let a trade run against him in Forex 500 pips? I think we all know what the answer is. So, now, the answer could be perhaps if a 500 pip drawdown was within the risk. If they were willing to lose 500 pips on that trade, then that was an acceptable loss. But we all know that wasn't an acceptable loss in that one trader's case. No. So what you do is you have to do your money and risk management. Now you could probably hear me chuckling a little bit. It's just because to me, it's one of those things where it goes out of the realm of the norm or the reasonable. It's one of these things where you've got to be kidding me. And that's why I'm kind of chuckling. Because it's just like, wait a minute. You were down 100 pips. You were down 200 pips. I mean, it's one of those things where they've, talked about all those different biases. And was that what the sunk cost bias, where you've got so much in, and you're trying to dig your way out. But see, you can't dig your way out because you're just digging yourself deeper and deeper in the hole. You don't dig your way out. You got to put more, you got to put something down or build a ladder or, cut some foot and toe holes and hand holes in the side of the wall so you can climb out of it. But anyway, um, it's just real simple. You have to lose like a pro by using one of these two simple equations, okay? And then you use this risk. How much are you willing to lose per trade? And then you calculate either your position size or the stop loss based on the risk and stop loss and position size. It's that simple. So you get to choose your risk, then you get to choose either your stop loss, then you determine your position size, or you choose your position size, which will determine your stop loss. Now, one of the things about determining position size and stop loss is if you determine your stop loss, usually you have to base it on something that you see on the chart. So, for example, if you were doing a weekly wick zone trade, and let's just, since these numbers are kind of bunched up and there's nothing I can do about it because of this spike here. So let's say you go long at 93. Well, the worst case scenario is you'd want to go short or you'd want to exit here, take your stop loss 40. Well, that's what? 53, 54 pips away if you want to include that 7. That means you have to trade really small if you have a 50 pip stop loss. Now, don't think 50 pips is that big, because if you're trading on a weekly chart, I mean, if you look at the weekly range, that might only be somewhere between, say, 30-20% of the range. So it might be reasonable to have a 50 pip stop loss if you want to trade off the weekly chart. Now, you're not trading the weekly chart, you're just looking at it, you're picking a couple levels. But you see, you might be able to drill down here. You look at the daily, okay? And you say, well, if I go long here, then I'm going to stop out here if price starts to exit the zone on the other way. Once again, it's pretty straightforward, pretty basic, pretty simple. And you can see here, we've got green on the multimeter. And for those of you who are new, that is the TRO multimeter candle color. It's kind of funny, but a lot of people like to use the real simple indicators, and this is one where you can see the candle color on all the charts. And as you can see here, price just went red from H4 all the way down. Okay. But you can see daily, weekly, monthly are green. So those of you who believe in things like trend, even though I like to call things bias, you can see here, daily, weekly, monthly, we've got a bias to the long side because price is above the open on those 3 chart periods. Because we have a daily open, a weekly open, and a monthly open, and price is above those 3 opens. Because to me, it's all about the open, because that's where we measure things from. So on every time frame, we measure from the open. And that's the one line that doesn't move. Once the open is established, it's cut in stone, carved in stone. You don't get to move it. Now, the high and the low for that time period, price can push to a new high, can push to a new low. Now, in the previous candle's high and low, guess what? Those are set in stone, carved in stone, because that candle's closed. It's over. And that's one of the reasons why I use the open and the previous candle's high and low for measurements. So, for example, here, we've got the first day of the year. So I have to scrunch this down because it was really... So there's the low, there's the high, first day of the year. This is February, so here's the high, and here's the low, and then here's the week, current first day of the week, high and low. And you can see right now how price is staying in those ranges. And here's the open for the year, open for the month, open for the week, and you can see where price is. So if you want to lose like a pro, you might say, okay, here's the low first day of the week. Here's the low first day of the month. So this is closer. So you might want to use this price. If you're going long, you might want to use this price as your stop. But then again, here's the opening for the month. So that's even closer. So maybe you put your stop loss there. Think about it. if the month goes from green to red, it could run a ways, meaning it has to range. So depending on how much of the range of the, say, the average range or the ATR, average true range, price is already used, you're thinking, well, let's just say price on the month has, for actually, we don't have to say it. We can actually go look at it, because I do have my statistics charts loaded up here for you. I just have to remember which one of these. See, that's high to close. That's high to open. Okay. There's the H1 frequency distribution of the range. But let's look at the month since I brought it up. Okay. As you can see here, the range is over 100, 99% of the time. I'd have to go in and change these numbers to get a more precise breakdown to see how many are over, might go from 100 to 199, 200 to 299, and so forth. Actually, we can maybe do it real quick here. Frequency distribution range, you can see that's a 2014 donational. No, this one isn't a UI. This one doesn't have user interface. I'd have to go get a different one. Point being, here's the range right now for the month. Oh, sorry, that's the daily. Let's see. We can change on the magnified market price that I modified. What we can do is show chart period, my period. We can put current on there, and that way we can get an idea. So high close 120, close low 57, so it's already run 177 pips for the range. So it's in that percentage, and that's why we'd have to be a little more precise to see how much more gas is in the tank when it gets to that low or it gets to that high. So once again, you can go back to the chart where we had those lines. I got too many charts on here. So once again, you can see right here, you can use these and say, this is the closest line. That's where I'll put my stop. So in other words, we'll be using statistics, and we'll be using, these levels that don't move as our stop loss levels. And I'll just run through the charts in case you guys like looking at these. But I've got a minute left. You can see we're back to the inside bar. So there'll be an opportunity to exit that inside bar once again. On the daily, the range is only 46, only 2 pairs over 100. So not much happening that wise. You can see here, highest open, lowest open for the week, for the day. Pivot point was really close to the open, so once again, no real bias, but we did take out the pivot. Rat zone, the rat zone is on, but not by much. We've only got 46 pips of range. I usually like to see about 60. We took out the pivot. And fellow traders, that's it. Just remember, It's not what you trade, it's how you trade it.